Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a continuation move higher, and heading into the open, we know that the buy side is in firm control. But the challenge today is that the S&P is set to open at a fairly high price, at fresh all-time highs, and the upside potential could be fairly limited. Now, we don't have any hard resistance up here. The market is setting new highs. This is the first time that these prices are being tested, but given the recent ranges, if the bullishness continues in real time, then there would be potential to tag 79.25 to 81.25, and that would really only be a 10 to 12 point range. So at this point, the resistance zones on the upside are purely based off of the range expectation on the day. They are not hard areas of resistance. And if we're not seeing continued upward momentum in real time, then the market doesn't even have to get to 79.25 to 81.25, and it could simply come back down, test 68 to 70, and just continue balancing within a range. So on the downside, we have pre-market support at 68 to 70. That is the aggressive area of support. But when you have time frame alignment, quite often, even the aggressive areas of support tend to attract buyers on first test. Below that, we have initial support at 64.25 to 66.25, another spot where buyers can be active. And then finally, we have the breakout area and yesterday's low at 60.5 to 62.5. Now, given that the market just broke out to a fresh all-time high yesterday, it's unlikely that we're going to come all the way back down to 60.5 to 62.5. But if the market starts balancing up here, then there is potential to test 68 to 70, and even a test of 64.25 to 66.25 would not change the overall bullish market structure. So today our focus is going to be on the long side, but we still have to be aware of where we're getting in and what the reward to risk is at that entry price. Because if you're buying at a very high price, there simply may not be enough left in the move, at least on the day time frame, to justify the reward to risk. And that might mean that we take no trades today. If the market does not provide a high reward to risk entry, then it's perfectly okay to not take any trade today. But if we get a pullback to a support area and we're not seeing any major warning signs in real time, then that can be a long setup. So that's how the market is set up today. We have time frame alignment. Our bias is bullish, but the upside could be somewhat limited from here. And because of that, we do have to pick our spots on the long side, and we do have to make sure that the bullishness is continuing in real time. So those are the main ideas. Let's see if the buy side can maintain this firm control, and we'll take it from there.